The Honest Money podcast is brought to you by Prescient Investment Management. We consider everything to give you the advantage. It's the future of investing. Prescient Investment Management is an authorized FSP.
Welcome to Honest Money. We're recording one of the last episodes of 2024, and one of the big kind of themes in the investment world for the last few years has been a focus on how we can align the way we invest our money as individuals with the things that are important to us in terms of our values. And so there's been this phrase ESG, which has hit the investment world like a storm, and like any storm, it's got its backers and its detractors. And I thought we need to call in some serious backup here to firstly help us understand what it is. Number two, why it's relevant, and then number three, what the future of this of ESG is. And so I'm thrilled to have a repeat guest, one of my favorite repeat guests on the show, Michelle Green. She's a credit analyst and chair of the ESG committee at Prescient Investment Management. Michelle, thanks so much for joining us.
Warren, and thank you to the listeners for the opportunity.
So, Michelle, I think maybe let's kick off. We don't like jargon on Honest Money, so now I'm throwing it. I've thrown the jargon 3 times in the introduction already. What is this ESG thing?
Well, I mean, simply put, ESG just stands for the environmental, social, and governance factors. And ultimately, if we were to just give examples of what those 3 elements actually means, if you're thinking about the environmental pillar, it's ultimately just that, thinking of climate change, thinking about pollution, thinking of resources. It's very much putting it in practical sense, thinking about, water, for example, waste, social elements. Think about it from a community perspective, or even staff, suppliers, like the real social people factor. I'd like to think of it. And then governance it's more of, okay, so how is a business run? What are the mechanisms in place? Who are the people driving that strategy? It's how a company is ultimately managed, and understanding what drives that operations. What are the best practices in place? So governance basically is the backbone of a company, and that drives the strategy towards, the environmental pillar, the social pillar, and ultimately the performance of how a company ultimately functions.
So for me, I think the thing to understand for investors is this is not just a bunch of hippies sitting somewhere in a rainforest, singing Kumbaya and hoping that everything's going to get better. In this world, we're dealing with fairly hard-nosed, tough, analytical people who are taking money and investing it somewhere. So with still the primary purpose of investing money to get a return, so that money can grow. This is not a charity initiative where investors are saying, let's follow a theme so we can all feel better, but our 100,000 that we put in is going to be worth 90,000 after 5 years. This is saying we're going to put money in. It's going to generate, the prospect is that it's going to generate a return. Of course, there's no guarantees in life. And then secondly, that there is a longer term focus on not just how we make profit this month or this quarter or this year. It's about how can that money have a big impact on both the way that the business works and then the broader context of that business. So it's not, for some people, I feel like they associate ESG just with the environmental aspect of that, and for me that resonates. I'm one of those, but actually, in a country like ours where we've come through a long period of corruption, for example, ESG also has a focus on governance, and it's how businesses do business. And if you do business by bribing cabinet ministers to get licenses to do things, you really shouldn't be ranking well on an ESG rating. So as an investor, when I look at ESG as a theme, it does resonate with me on a values level. But equally, I feel like if it's part of the management team's criteria, the way that they're going to get measured by their board and their shareholders, it also means that they have to have a longer term focus. They can't just worry about the next 3 months or next 6 months. They have to look a bit further down the road into the future and say, how can our business be sustainable, both as a business, but also in the environment that it operates? Is that fair? Am I living in dreamland?
No, certainly. I think you raise very key points there, and we shouldn't be just siloed focused, because ESG, think of it as a ecosystem. It all kind of interlinks. And so if a company is looking after its staff, it has the right policies in place, for example, it has that inclusion factor, the staff or suppliers, etc. It all kind of works together. And then from the environmental pillar, for example, if you are a company, a mining company, that literally does impact the environment, ultimately you have to take those factors into account. You have to look at, what sort of other alternatives can I look at because these companies use lots of electricity, for example. So there's lots of expenditure. How can we be more sustainable? How can we put more best practices in place that will benefit us, the environment, our staff in the long term? And research has, in fact, yes, I understand that there's lots of elements that go with it, but research actually does show that investing with a mindset of sustainability, taking into account these ESG factors, ultimately leads to more resilient companies and has proven that you can and may outperform in the long term. I think with the mindset just needs to change, that it's not a short-term focus, but a focus where we think of sustainability, attach that to a long-term vision, and ultimately shifting the goalpost from short-term gains and ultimately looking at what you'll reap over time as a company. It will just make you more holistically, more resilient, to actually deal with more complex issues as they arise. So, for example, if we're just taking, when load shedding used to be quite a key part of our day-to-day, a lot of companies were suffering. They couldn't keep doors open. They couldn't generate their own electricity. And so having to play catch-up for some of the companies meant they had to fork out a lot of the financial elements. And so that does hit your profit margins. It does actually mean that you're going to feel it financially, whether you are investing in it now or playing catch up. Ultimately, it does impact financial valuations, for example. And as an investor or a stakeholder, obviously you want to be partnered with a company that is forward thinking, more innovative, thinking how can we bolster our operations so that we can deal with complex issues as they arise.
And I think one of the criticisms, and I do feel it's certainly partly valid, is that anything that becomes a theme, a trend in the investment world, you always find people jumping on the bandwagon. So now you get sort of they're not called ratings agencies, but they're just, for my language, a ratings agency that says, well, we'll create a verification or a validation to say company A is now ESG compliant and company B isn't. And then people correctly, I think, do get quite angry and quite frustrated when they see that, let's not name names, but one or two of South Africa's biggest polluters are suddenly scoring quite well on an ESG scorecard. And again, I guess part of the answer will be it's E, S, and G. It's not just the one or the other. And so there is the opportunity for a company that might be a big polluter also to be investing heavily in its community, heavily in its staff, operating with very high levels of governance, etc. But in an environment like that, how do you look at that and say, well, 1 out of 3 is bad, but 2 out of 3 is okay, you score well? Or should they be kind of really downrated and just excluded as a potential investment for fund managers, pension funds, etc.?
Yeah, I think it comes down to what is your objective, and ultimately aligning it to your own philosophy, aligning it to your own values. So if you are basically focused on, if you feel that you are a lot more passionate about, the environmental pillar, then of course you'd want to assess a company based on mostly that. But today we're talking about ESG, and we realize that you can't look at it in isolation necessarily, because they are all intertwined. But governance does impact ultimately how these goals or objectives does get achieved in the long run. And I think that is ultimately, it comes down to understanding, so where is the alignment? What is it that you're trying to achieve? With some of these rating agencies that does give ESG scores, you need to understand what is it that they're assessing, because they could only be focusing on that environmental pillar. And as you rightfully said, that there's been such a big focus on the environmental pillar that we ultimately forget that social element, how governance ultimately is the foundation pillar of trying to achieve what needs to for a company. So in a South African context, it's different, because we clearly have social inequalities. There's a lot of social elements that need to be dealt with. If you think about it, if you're not looking after your staff, if you're not looking after that part of the community that you may be developing a plant or a project in, what happens? There can be riots. There's disruption to your operations. There's back and forth, unhappy or bad morale from the community, or that will impact financially, but also it takes a longer time to actually get back that reputation. And so, yes, I understand that there are companies that scores maybe well, but it's also taking into account a subset of specific factors that these rating agencies are looking at, without actually looking at what the ESG, and there can be flags in terms of risks that we basically missing. Like, who is the people behind driving it? How are they being compensated? Is it actually tied to their remuneration? I think the mindset needs to change from an investor point of view, that the onus is also on me to ask that hard questions to myself and to the company, and actually then see, does this actually align? Look at your own processes, and ultimately determine, okay, so what is it that I want to achieve? And not going into an investment blindly just because a score says it is good. We need to do our homework, and we need to ask the hard questions.
And I think that, I mean, you make a great point that it's a holistic view that you have to take. And I think in the earlier days of this, when it started gaining momentum, I mean, cancel culture was a thing, and so you would find in investment pressure groups saying, you have to divest from a company, and we'll boycott anybody who doesn't divest. And it felt to me that wasn't proper. It wasn't understanding the whole of the environment in which businesses operate. And I feel maybe that it's starting to mature somewhat, where you should be able to engage with a business and say, I mean, it's obviously not just me, little old me with my 100 shares. I mean, it's done at a much higher level, where bigger shareholders are engaging with board members to say, you are at the moment a huge polluter. And, what are you doing? What steps are you taking to get that right? And rather than just selling the company down and potentially, withdrawing funding from a business, which could then destroy lots of jobs, etc. It's about saying, let's move the needle so that you start to operate better month after month, year after year, etc., etc. And it feels to me that sort of an impact is much more valuable, because I look at a big fuel company, drilling somewhere, and you say, can you nudge that company to go from being an extractor of a fossil fuel to being an energy business where it supplies a range of different energies? And if it thinks differently and can be a positive impact on the world, that's a much better outcome than just shutting it down and ignoring it and boycotting it and causing enormous damage, economically and socially. So I feel like that to me is the positive. But Michelle, I guess we have to go to the other side of this as well. Is I'm reading more articles, especially overseas, around people saying, is ESG dead? Was it just a flash in the pan? And my sort of intuitive reaction is, no, well, that's rubbish. But I think we need to be understanding of why. Like, why are people questioning this? And is it still a theme for us in the months and years ahead?
That's a very valid point, and there's obviously a lot of controversy around the purpose and the need for ESG. But I think let's just bring it back home and say, it's literally about understanding what it is that it's looking to achieve. So it's understanding and how you actually using ESG as well. Some companies use ESG to integrate into their process alongside analyzing the financials, the numbers ultimately. And then other companies, they use it as a means to look at it from a lens from impact perspective or even sustainability perspective. It's ultimately understanding that first and foremost. Whether there's a need, I would say certainly there is still very much a need. If we're looking at just research and we're looking at what's happening around us, we're seeing a lot more natural disasters taking place. We're looking at water shortages. Let's talk about water shortages in Joburg. We all know that now there's water shedding. That's social, that's environmental, but also social elements, and it impacts real day-to-day, live functioning. And so, is there a need? Certainly, there's a need. There's a need for sustainability. So, integrating ESG into the investment decision making and the way in which a company does operate ultimately can lead to that sustainability. If companies were to, invest in that maintenance of the water pipes or ensuring there's alternatives in place, then they can deal with these complex issues and deal with the natural disasters. We live in a world where there is lots of pressure around getting it down to net zero, which ultimately means reducing carbon emissions. So again, that speaks to the environmental pillar. This is happening all around us. And so if a company decides that they're not going to invest in alternative energy sources, it ultimately, it will impact them later on. It will eventually impact them. I think the story is that we shouldn't be short-sighted. ESG or sustainability mindset is a long-term game. And so there can be a lot of noise around, but companies aren't doing this. We're not seeing progress. I think ultimately you need to look at it from a year to year, looking at the progression, looking at how money is being spent, going back to what management said. Are they actually achieving that? Did they put the money where their mouths are? Can we see that being put into practice? And ultimately, it comes down to that. It comes down to, again, keeping corporates accountable. There's reputational risk. We've seen it. It does have financial implications from a share valuation perspective. So if you're an equity holder, for example, you'll see that share suffer because of reputational news flow or whatever the case. You will feel it in your pocket. From a company perspective, but also as a shareholder in that company. So down the line, there will be implications. For example, from the emissions perspective, there's taxes as well. So if companies aren't investing in actually doing the work, there will be financial implications. And this is real life issues. And one can argue, but so what? Think about what's important to you as an individual. Think about why you're investing into this company and look at it from a mindset of long term. One can argue that, it's not really, it's just this, it's another theme going around. But looking at it from a context of real life issues to say companies that are investing in the areas that affect their operations and ultimately the social element, it does impact. And it does lead to resilience. It can lead to outperformance, which ultimately means more money in your pocket. So it's an ecosystem. I don't see it in any isolation of any kind.
So then let's get to a little bit of nuts and bolts. If someone's listening to this and they buy our argument, because I think you and I unfortunately are agreeing. So if they believe that this is something that resonates with them as well, how on earth does someone actually buy investments that are in this ESG kind of correct in this ESG framework?
So if you're looking at ESG investing, there's lots of practical elements that you can do to incorporate or try and find platforms. So in terms of practically speaking, the steps I would follow would be first and foremost to decide what is important to you, what is your objective, how does this align to your values, your goals? Is it mostly environmental? Are you looking with a lens to reduce carbon emissions, for example? Or are you there to promote social justice? Or do you want to see the company as a whole ultimately, invest in all of those elements? And so understanding the alignment, objectives, the goals, that's first and foremost. Secondly, there are lots of ESG type focus funds out there. The easiest would be to start off with ETFs, which you can put your money in there, which ultimately that exchange does it for you from a selection point of view. And then on the other side, there's other companies that offer ESG rated funds. That does get rated by externals, for example. You can then check the ESG ratings, understanding their methodology, which ultimately will help you as a guideline of how a company is, how well a company or the fund is performing on its ESG metrics or milestones. MSCI, for example, is one. Sustainalytics does it as well. So ultimately, to do your research and also go in with it with a long-term mindset. ESG investing is often, it is tied to long-term investments. So try and walk that with patience, understanding that it will not necessarily be a short-term gain perspective. And then, of course, seek financial advice. After you've done your homework, seek financial advice. Try and get that guidance. See what other options are out there, because obviously that will just help broaden your knowledge. But ultimately, there are funds out there that you can invest in from an ETF perspective. Lots of companies are focusing on the responsible investing, but also sustainability perspective. There are funds looking for to achieve both that, but also impact. So it's about doing your homework. It's about asking your financial advisor or asset manager those questions and looking at the options that are available to you.
I think that's a perfect place to wrap up, Michelle. Thank you so much for your time, Michelle Green from Prescient Investment Management. I think we always have long recordings, you and I, when we do these. So it tells me that the time is flying by, and I'm certainly learning a lot, and I'm sure our listeners have as well. We appreciate your time, and thanks so much for joining us.
Thank you for having me.
The Honest Money podcast is brought to you by Prescient Investment Management. We consider everything to give you the advantage. It's the future of investing. Prescient Investment Management is an authorized FSP.